In this video and in my subsequent videos, in this video and possibly in my subsequent videos, we're going to be practicalizing everything we've learned from day 1 to day 8 on the chart. Now what this means is that we're going to be spending more time on the chart and less time on the board. Now, because of how complex or how difficult it can be to understand what's on the chart, we are simply going to be taking this thing step by step. So what this means is that we're going to be doing it one after the other. But before that, I want you to record that we've learned about 1. Time frame. I will know what time frame is, and as well know as a day trader what time that you want to use and the one I don't want to use. And the one I want to use, you simply know what is used for and purpose of using that particular time frame. So we understood what time frame is. 2, we understood what market condition is. And market structure. Now we have talked about market condition and market structure, and that was in day 4. Probably plenty people know the video, but I tell you the truth, that's where mathematics is. If you don't understand what I explained in that video about market condition and market structure, you will find it a bit difficult as you proceed. So I advise you go back and watch at day 4 what we talked about during when we were talking about market condition and market structure. Now, the third one is simply support and resistance. We'll explain to you what support and resistance is, how to identify them, and how to explain what it is. And I explained to you all of these things in my previous video. So for this video to make sense to you, for my subsequent video to make sense to you, you simply need to be able to learn or understand what was done in our previous video. Now number 4, which is news. Now we'll explain what news is and how we can actually, or where we can actually see news in forex market. And I explain to you what news is for and how to actually interpret news. So in my subsequent videos, we're going to be practicalizing all of these things on the chart by simply identifying all of these things and seeing it live on the chart. But before going to that, the only way you can tell me that you like this video, you're enjoying this video, like what I'm doing is to like this video, drop a comment saying I like this video, and as well subscribe. Without further ado, let's go straight into the charts.
The first thing that you want to do whenever you open the chart, the first thing, like the number 1 thing that you need to do first whenever you open the chart, is for you to be able to identify market condition and as well identify key levels in the market. Now, if you've been following me my previous videos, you understand that market condition is simply the state that you're going to see the market in. So no matter what you're seeing on this chart, no matter what you're seeing here, market is either doing any of these things I'm going to say in this video. First, is either is trending to the upside, or is trending to the downside, or it is in a ranging phase. That means once you open the market, the first thing you want to do is to identify the condition of the market. Is market in the ranging phase, or market is trending to the upside, or it is trending to the downside. So no matter what you're seeing in this chart, no matter what you're seeing here, no matter anything you look at this point, is the market is trending to the upside, or it is ranging, or it is trending to the downside. This is referred to as market condition. And now the time frame that you want to actually identify this market condition and as well mark out key level is referred to as daily time frame. Now key levels are simply area or point that price wants you to pay attention to. That's referred to as key level. That is the key level that you want to pay attention to. Price wants you to know what price is actually doing there. So what you want to do on daily time frame is to identify the market condition and as well key levels. And now the way to identify market condition and key level is by simply understanding what support and resistance is, because you're going to use support and resistance to identify if market is going to the upside or market is going to the downside. And the way to do it, remember what I told you about support and resistance, is simply a point where buyers are agreeing to buy from, and as well sellers are agreeing to sell from. Now, a point where buyers are agreeing to buy from is referred to as support, and the point where sellers are agreeing to sell from is referred to as resistance. So we're going to do all of these things here on the chart. Now remember, first thing first is to understand direction of the market. We're already in the time frame on GBP and I want to understand where market is going to. Now, if you look at this chart now with our eyes, we can see that market is going to the upside with our eyes. Why? Because this is a swing low, this is a swing high, this is a swing low, this is a swing high, this is a swing low, and price is going to the upside with our eyes. But one of the rules that you need to apply on this chart whenever you open is that don't allow your eye to tell you what's going on in the market. Allow your strategy to tell you what's going on in the market. Right now, what is going to tell us where the market is going to is simply refers to as trend line. The trend line is going to tell us where price is going to by simply identifying where buyers are agreeing to buy from and identifying where sellers are agreeing to buy from, simply using support and resistance to identify those zones. So remember the number one rule: don't allow your eye to tell you what the market is doing, but instead allow the strategy that you're using to tell you what the market is actually doing. Now, taking us to the first step to identify the direction of the market. Now, with our eyes, we're seeing that the market is an uptrend, but let's understand what our trend line or our strategy is saying. Now, remember what we want to do is to identify points where buyers are buying from and points where sellers are selling from. Now, if you look at this price action that is happening here now, you can see that at this point here, price was simply in an uptrend here. Why? Because once price gets to once price touches this trend line, it goes to the upside. So this trend line is telling us, oh, at this point, price is in an uptrend. At this point, from this point that I do this trend line to the point where this trend line stopped, price is simply going to the upside. So at this area, at this point, price is simply going to the upside according to the trend. But at a point here, what happened? Price broke below price broke below the trend and got to this point. Now, this point where price got to is referred to as our key level. I remember what I said about key level. Key levels are simply point that you want to pay attention to, or where price is asking you to pay attention to. Now, when price broke out of this, sorry. Now, when price broke out of this trend, this uptrend here, price got to this point and asking you to pay attention to what price is doing at this point. So this point is referred to as our key level. Now, once we find our support key level, and this point is different from our support key level, once we find the support key level, there's always a resistance key level. And now, where is the resistance key level? That point that price broke out from is referred to as the resistance key level. So what we want to do is to use our trend line and identify here as what resistance key level. And remember what key levels are simply point price is asking you or market is asking you to pay attention to. Now we have marked out our key level, and as well we have seen direction of the market. Now, what is our conclusion yet? Are we buying or are we selling? We don't know yet. Why? Because price have not told us what to do next. It's only asking us to find the direction of the market and the key level. Now, the key level is simply the trend line is simply telling us that when price was going to this area here, this point here, price is actually in an uptrend. But since price broke out on this trend line, what is price doing? Is price going to the upside or is price going to the downside? We don't know yet. But the way we can know is for us to understand what price is doing at this support key level and understand what price is doing at this resistance key level. So what you basically want to do on a daily time frame is to understand direction and key level. Now, if we have understood direction and we have marked our key levels on daily time frame, the next thing that I want to do is to simply understand the market structure between our key levels. Because price is asking us to do what? To understand what price is doing from that support key level to the resistance key level. So our focus now is to understand what price is doing at that resistance key level and as well that support key level. And the only way for us to understand that is to simply understand the market structure from that point, support point, to the resistance point here. So what I want to do next, we're going to switch to the 4 hours time frame that tells us what our market structure is. So daily time frame is for identifying direction and key level, whereas 4 hours time frame is for identifying market structure. Now, market structure is the most important thing in this trading. If you don't understand market structure, you're not going to win. If you want to win, you need to understand market structure because that is the most important aspect. It's like mathematical aspect, like mathematics you need to understand as a forex trader. If you don't understand market structure, you have not started trading. So what I'm going to do now is to go to the 4 hours time frame and understand market structure from this support key level to this resistance key level. I'm repeating this all over again so that you're going to get used to it, and let me just clear it as well to you. It's not going to be easy for you to understand. The chart is very confusing because what looked like a buy yesterday can look like a sell tomorrow. So it's very complicating and very confusing. But with time, if you're able to master it and be consistent to it, you get used to it the way I've gotten used to it. So what you want to do again is to go to the 4 hours time frame and understand market structure. Now, on the 4 hours time frame, market structure is simply telling us that we should understand how price is moving, and if price gets to the resistance key level, how price is going to react. So what we want to do for is what we want to do on the 4 hour time frame is to use market structure to understand how price is moving, what is price doing, how is price doing it, and if price gets to the resistance key level, what is price going to do. What we want to do is simply for us to understand what price is going to do at the resistance key level. What we are expecting price to do is to see if price is going to still continue to give us the bullish uptrend by simply breaking above the resistance key level and giving us a change or a shift to the upside, or price is giving us or price gets to the resistance key level and give us a change of character. So two things are involved. We want to use market structure to understand if price gets to the resistance key level, would price break the resistance key level and give us a change of character to the upside, or price is going to get to resistance key level and reverse to the downside. So this is what we want to basically do. So if you're a buyer, you want to buy to that resistance key level and take your profit at the resistance key level, and then wait and see what price is likely going to do at that resistance key level by simply asking yourself or simply looking at the market to see if price is going to give us change of character to the upside or a reversal pattern to the downside. And remember, market structure simply consists of highs and lows, change of character, and as well break of structure. I explained this when I was talking about change of character. Sorry, when I was talking about market structure in my day 4 video. So if you know what that video, I advise you go and watch it so that this thing is going to make sense to you as we go on. Now, what we want to understand here is to simply see how price is moving, highs and lows, break of structure, and change of character. That's what we're going to be looking for on the 4 hours time frame. Now, if you look closely from the beginning of this key level here, when price got to this key level, let me take it up. It's still valid for it to be here. Now, when price got to this key level here, price began to give us change of character to the upside. Why? This is a low, a high, higher low, higher high, higher low, higher high. So price started giving us an uptrend direction. But remember, our focus is this. Had it been we are actually at this point, could have bought to this point here and take out this is what we actually have bought from this point here. We have looked for an entry around this area here by simply going to the one out. We're not going to rush it, but this is what we have done by simply buying from this point and putting our stop our take profit here and possibly our stop loss above this point, but we did not buy, so we did not meet price at this support key level here. So what are we going to wait for? We're going to wait for price to get to that resistance key level and expect two things. Is it that price break the resistance key level and move and continue to the upside, which is in line with the daily trend line we saw. Remember, on day time frame, price was on an uptrend. At a point, price broke below the trend and gave us a two key level that I want to pay attention to. Now those two key levels now is what you want to understand. If price is going to break the resistance key level and continue to the upside, or price is going to come and break down the support key level and continue to the downside. So it's a two-way factor here. We want to see price break above the resistance key level and continue to buy, or want to see price reverse at resistance key level and go for a sell. Now, what did price do when price got to the resistance key level? Remember, from support key level, price was giving us series of higher highs and higher lows, higher highs and higher lows, higher highs and higher lows. And when price finally got to the resistance key level at this point here, what did price do? So our focus now is what price did when price got to this key level here. Price started giving us a chain of characters to the downside. So price started going down when price gave us this high here, give us this low. This resistance key level is the high. Now this is the low price gave us. Now this high came out, and this high now took out this previous low. So price has given us that the price is going to the downside. So what do? We simply want to look for an entry around this area. We simply want to look for an entry around this area here. The point where price gave us, the point where price gave us a low after the price touched the resistance key level, and the high that price gave us when the price gave us this low. Is it confusing? I'm only saying that we want to look for an entry because price have confirmed that we're in a downtrend, and when the price confirmed it, when this high give us this low, and this low could not take out the resistance key high here, but instead give us this low here. So this low now, this high here became a lower high. This is the high, this is the lower high, and this is lower low. So price have confirmed that we're now in a downtrend. So this zone now that I marked out here is simply a zone that we're going to likely buy from. Now, the next thing I want to do is to Adebin would not have this, would not have all this price action here. Next thing I want to do is to refine this zone. This video is getting a bit longer and I don't like it. I don't want it to get boring. So in my next video, we're going to likely continue from zones. Now remember I told you that we have two types of zone. We have support and resistance zone, and we have supply and demand zone. Now in my next video, I'm going to simply use supply and demand zone, and also I'm going to recap on market structure for you to understand properly. But what I want you to hold on, or what I want you to hold on to this in this video is for you to understand that what you want to do on the daily time frame is for you to understand direction of the market and as well identify key levels. And the only way you can do that is by simply for you to use your trend line. Don't allow your eyes to tell you what the market is doing, but instead allow your strategy to tell you what the market is doing. So if this is what you can hold on to in this video, is a plus for you. And in my next video, I'm going to still start afresh from market structure because I know I didn't go deep into market structure in this particular video. So in my next video, I'm going to go deep into market structure. If you're not subscribed, I would like you to subscribe. And if you like this video, just drop a like on the video telling me that you like this video. That's the only way I'll know that you like this video. Without further ado, let's see you in the next video. Peace.